Reasons where you should rent and not buy.
You heard that right. We're going to talk about reasons why. And one, your credit score is not high enough. Two, you are saving for a down payment. Three, your employment has not been consistent in a year or two. And number four, your employment, your income has not been high enough to qualify for a home that you're trying to get into.
Wow, all of this starting now. This is Irina, Melina, NorCal Property Sisters. Wow, Irina, so there's a mouthful over there. Let's get into some details. This is a personal note for me because I am currently renting and not buying. You are a proud house owner with multiple properties. Okay, well, you mentioned the first one, I think credit score.
Yes. So
what's up?
Despite the market screaming at you that you should buy, buying is not for everybody. If you don't have these things, such as a high enough credit score, then you should rent. So let me define high enough credit score.
Right.
In the state of California, there are several, and throughout the states, but there are several programs that you can buy a property with. FHA requires as low as 500 credit score, but the caveat is that your rate will be higher, your fees are be higher because that's being considered as a risky borrower. So conventional requires as low as 620 to 640 credit score. And conventional, of course, is the way to go because fees are less and there's a lot more flexibility and desirability with that type of financing. So that's with the credit score.
I qualify for that. My credit score currently is 720.
Good for you. That's awesome.
So tell me the next one. I will tell you what I don't qualify for.
Okay, so credit score. Some people are afraid that if they get credit score pulled, it's going to go down. Yeah. Now, if it's being pulled every 90 days or so, nothing's happening to your credit score. You know what's happening with your credit score? If you are on the market, you're shopping something and you run it multiple times a month. I had a case where buyers were shopping cars and they unfortunately either they weren't aware, they run it like 12 times a month.
Okay.
And it dropped from over close to 800,000 to under 620, which was a big jump. And all of a sudden they weren't able to qualify for a loan they were planning to. So that's credit score. It's important, yet it's not, it's not the end of the world if it's going to get pulled.
Okay. Number two, savings or something?
Saving for down payment. So FHA financing requires 3.5% down.
3%.
Yeah, so you don't need 20% down to purchase a home. You don't need 10%. I mean, you can buy as low as 3%. So let me just break that down. Conventional financing requires 3% down payment being the lowest. Now, anything under 20% of down payment, you will have a PMI, which is a private mortgage insurance.
PMI.
Which is, it basically is a safety net as for you, for you as a risky borrower. Risky borrower is anything under 20%.
Yeah, you'll need insurance and then you're going to pay more actually, right?
Correct.
Monthly.
Yeah, so it's, depending on the mortgage amount, it's somewhere maybe from 100 to 300 a month in addition to your mortgage. So that's PMI. For FHA, you can do 3.5 down, and same story. FHA is a federal housing, program that borrowers can utilize. With FHA, you can also utilize down payment assistance program, which state to state, it's different. County from county, it's also very different. So roughly, you need 3% down to buy a house.
3.5, and then what's the 20%?
And then the 20%, of course, is the most desirable. Which eliminates the PMI. And, if you're buying a rental property, investment property, you will need at least 20% down, in some cases 25% down. Okay. Because it's a second or whatever income property.
Ask me what I have.
What do you have?
I have the 3% and I have the 3.5% if needed.
See, so you have a great credit score. You have a down payment down.
I still can't buy a house though.
Yes,
you'll find out why.
Yeah, we're getting there. But that's one of the reasons why you should be renting and saving up. So if you have an opportunity to really save up money as soon as possible, we would highly recommend you do that because down payment, having that in this market is great. I mean, it's amazing. Your chances of being competitive is great. 3, this is actually relevant in light of COVID and unemployment of 2020, right? So if you had a recent unemployment window in 2020 or at some point, That's another thing. So caveat is this: if you were employed at a certain job and then they laid you off for whatever reason, and then you restarted at that same job, you're fine. You're
Right.
fine. Where things are different is when you were employed at the job, you got laid off, unemployment, you were receiving unemployment, and then you got hired at a different job or a
Right.
different position.
Not same company.
Then, not same company, right? Thanks. That restarts the whole cycle, because what lenders are looking for is, that jumps into point number 4, is self-employed for 2 years of income. They average out your 2 years of income as a realtor, as a truck driver, as whoever it is. They average out my income. You are self-employed as well for 2 years. So if it was a one good year and then one bad year, they actually look at the bad year. But if it's a good one and a good one, they average it out, and that's what you basically get pre-approved for.
So this is where my personal hiccup is. Going back to the unemployed, that's where you become a risky buyer, and they're just not gonna qualify you to buy a house. Jumping from working for a company and then unemployed, and then switching. In my case, I'm self-employed. Now self-employed means show 2 years of income, which is not good because it's like this. But if I came back and worked for the same company, I would have just still had to show 1 year of income, which I need to wait till January. So I'm kind of like a sitting duck and just collecting money, and
that's right.
I'm gonna pay taxes and show proof of income and then get a house.
W-2 workers, which like those that are employed, you're employee of a company, you can use 1 year of income. So talk with your lender for any specific questions. Reach out. I can share my lender's information. He's very knowledgeable. But those are the things that you should focus on saving, improving your credit score, saving up for a down payment, doing something with your employment history to show a consistent record, because lenders right now are so governed, so to say. They're really meticulous, and they ask questions, and they want proof that you are not slowing down, that the down payment you're going to pull out from your account is not going to hurt you being a self-employed person. We just bought a rental property, and the questions they've been asking weren't even asked 2 years ago when we were buying a house, so things have changed, and we adapt.
Yeah. And in my case, it's just I really want to buy a house, but I just can't. And I know there's a lot of you out there that are in the same boat, just as me. We just have to get our ducks in a row.
Exactly.
So,
and don't, you
reality.
gotta do what you gotta do. Don't stress out about buying a house. Get your ducks in a row, like you said, and then you'll be in a great position to buy a house in its own time.
Yeah.
And your house will be yours.
Check back with me in January.
Yes. No, we'll shoot an update.
Yeah, we'll do an update.
Yeah.
We'll go house shopping together. How about that?
That's right. We'll take you along with us.
Hey, thanks for liking and subscribing to our channel. It means a lot to us. We're growing slowly but surely. You mean a lot. It's great.
Thanks for watching. Have a good one.
See ya.
Bye.